Well, yes, when you hear those types of arguments, that's certainly when you should start getting a bit worried. I think if you look at valuation, say for the Nasdaq 100 at an index level, so there's always going to be companies with high valuations which may or may not be justified, but the valuation for Nasdaq as a whole actually are not that high. I mean, they are above average, but we appreciate. I think we're in a different environment now than we've been in the past, so some premium, at least to historical valuations, in our view is warranted. Now, that's not to say there isn't going to be adjustment at some point, and particularly where that could come from is if inflation doesn't decelerate quite as quickly as we all would like because growth is so strong, then interest rate expectations might rise. That's going to be negative for valuations, but we don't think it's going to change the long run upward trend that we anticipate for the market.
Yeah, but Dan, that's why I was asking the question just last week then. If the economy is so good, why cut? Surely there's no need for the consistent basis of cuts that is put out there.
Well, that's certainly, hopefully something the Fed is thinking quite a bit about. How quickly do they need to do it? And I think the challenge, as always, is the lag effect of cuts in policy rates. So even if we certainly have growth that's quite high now, 3% or so forecasted for the third quarter, inflation, nonetheless still above target, moving slowly back down to target. How much you need to do now, how much next year. We've already seen the market take away one cut it had priced in for next year. And again, I think the risk is that they have to take out more cuts rather than putting them back in.
Yeah. Wanted to find out what the fortunes are for small caps. I find this very interesting. I mean, just this year alone, S&P up, 22 odd percent, Russell 2000, around 11% or so then. So not the same, but fortunes changed just a little bit last week. Does that mean anything?
Well, I think it's important to keep in mind what's the reason for that outperformance of large cap stocks, because it really does come down to basically the growth sector or tech sector, NASDAQ, however you want to look at it. So relative to that kind of benchmark, really almost no market has done as good. So be it the rest of the U.S. market, be it U.S. small caps, European equities, Japanese equities, emerging market equities. I mean, right now, clearly, it has been the year, if not more, for NASDAQ. We are overweight NASDAQ in our multi-asset portfolio, so we believe in that theme. And so relative to that, the fact that small cap is underperforming is not so surprising. But that doesn't mean that there's not a lot of opportunity there. And particularly if you want to look at it from the perspective as it's a way to take advantage of other, if you will, growth parts of the U.S. market without increasing an allocation to the tech sector.
Dan, a word on China. I have no idea, like a lot of people, what is going on. I see a lot of incremental efforts rather than some form of bazooka from the Chinese authorities as well. But I have great empathy for the Chinese consumer who just wants to save aggressively at the moment as well. What are your thoughts? Because it is arguably the second most important economy on the planet as well. Do you think all these measures that are coming through are going to make a meaningful difference to growth?
Well, to pick up on your point about it being the second largest economy, if you think about that big rally, even though some of it's come back, but obviously a very large rally in Chinese equities for the second largest economy in the world, you would have thought that would have had bigger spillover effects in the rest of the world, and it really hasn't had as much of an impact as you would anticipate. And I think it goes back to, yes, the market's rallied a lot, but really have we changed our outlook for the economy? And I share your concerns, your skepticism that we're not so sure that we're seeing it. And I think the fundamental point is for all the measures that have been taken, I think where the disappointment, at least for foreign observers, comes in is measures for the property market. I mean, the fundamental issue, or one of many fundamental issues, is that you can cut rates, interest rates, but people aren't necessarily going to react if confidence isn't there. Confidence isn't there because of weakness in the property market. And so you need to start with that fundamental issue before you get the chain effect that you want.